Hello and welcome back to many of you to the Security Token Show. We're your hosts. I'm Herwig Konings, and of course, Kyle Sonlin, as always, my co-host. How are you, buddy?
What's going on, man? We have another great week of news. We're wrapping up the month here of December 8th. Only a couple more episodes left in 2023, but that is not stopping the momentum.
Yeah, we got a little bit of Art Basel fun here in Miami. I know we got a lot of events, a lot of friends in town. It's been great catching up and hearing all about the plans for 2024, but that didn't stop another great week in news for us to cover. So with that, let's get into the Token Debrief. And on a consistent streak here, we got our usual guest, Jason Barraza from STM. How are you?
Doing great. Another fine Monday morning. Let's dive into the news, man.
Well, it is time to kick us off with another great report. Last week, we did the same thing. We're trying to quantify the exact savings, and we've seen it yet again, I think almost on par with the same numbers, this time from CashLink, as well as in conjunction with FinPlanet. Their report estimates the cost savings on an 8-year bond could be 120 basis points. That's 1.2% of the value of the bond. So just to be clear, basically they say that if you use DLT, they think there's an 85% reduction in middle and back office costs, and say over the spread of an 8-year bond, the 120 basis point savings represents 15 basis points per year. So it's roughly like 15 million euros or every 10 billion in assets under custody as the example they gave. So very incredible stats, I think, given that the bond market is trillions in size. Kyle, Jason, what do you guys think?
Jason, what's your thoughts?
Sure. Yeah. No, it's always great to see some quantifiable results coming out of third parties and whatnot. It's something that in the past we didn't have anything to point to. And so people are always asking, why is tokenization such a big deal? Why do the institutions care? And so the cost savings narrative now has some tangible ethos behind it. So great to see these reductions. Obviously, as you mentioned, Herwig, they're in line with previous reports that we've read and talked about on the show. I do want to stress the fact that obviously it doesn't account for all factors, such as building new infrastructure to support front to back, but in the scenario that they give, obviously they're good numbers. So once it is implemented, I'm curious to see, taking all costs into consideration, what's that final number going to be?
Yeah, I want to reiterate the fact, Herwig, that you mentioned there, $15 million or euros in savings on every 10 billion in assets under custody. And when we're talking about banks or institutions that have hundreds of billions of assets under custody, we're talking about, close to 50 to 100 million euros in savings just by leveraging this technology that far surpasses the cost of potentially building out some of the infrastructure here. So very, very cool to see. Great report. And then to our next piece of news, we're talking about RedSwan. They are based in Houston, Texas. They are tokenizing real estate. They just launched a new announcement talking about a $4 billion real estate portfolio managed by a Dubai-based company called White Rocks Holdings. This is 36 mixed-use properties in the MENA region. And so this is office, multifamily, retail, industrial. They're really covering the whole gambit here on a $4 billion real estate tokenization project. This is some big news coming out of Houston as well as from the international efforts of the Middle East.
Real exciting stuff there. RedSwan has already tokenized 5 billion in the past. Now adding 4 billion just like that onto the record. It's really exciting to see. I'm sure a very exciting milestone for the team over there at RedSwan CRE, led by Ed Nwokedi. And we do have an interview coming up later in the episode, so we'll get to hear directly from Ed, what his experience has been here with this project and what next steps look like. But another note to have on that region, by the way, guys, is CBRE is suggesting a 5.7% growth rate from now till 2028 with development pipeline at $1.4 trillion, guys. And so the fact that part of this portfolio does consist of prime development sites just speaks to the fact that, hey, like investors potentially could be getting some of that upside, considering that pipeline that CBRE is talking about. But moving on to other new. Oh, go ahead, Herwig. You were going to mention something.
I was just my key takeaway here is also Dubai. Once again, the Middle East skyrocketing. Here, White Rocks Holding, which another clever name from the finance industry. Yeah, this is a 36 mixed-use property. Portfolio, billions in size. This is the sheer size and ease potential that this market can grow, right? All it takes is just bigger fish coming into the market with bigger portfolios. And next thing you know, 10 billion is commonplace, 20 billion. Suddenly you're going to start seeing very large issuances that, again, this is all about scale. So that was just my key takeaway. Please, Jason, what's the next bit of news you got?
Well, next up, we do have Basel Zurich, tokenizing bonds to settle with the Swiss wholesale CBDCs. We covered this in episode 213. If you didn't watch it, please go back and check out. But, back in that episode, we talked about how the Canton of Zurich was issuing a 100 million CHF Swiss franc digital bond on 6 Digital. And so following their footsteps, now we have the city of Basel issuing their own 105 million Swiss franc bond using that same infrastructure, the wholesale CBDC, for settlement. So these transactions are happening actively. We had them happen 2 Fridays ago. So happy to see some stuff here. And so wanted to get you guys' thoughts on, why wholesale CBDC is important, why things are happening now. Any input, guys?
Yeah, this is a market that just continues to expand because the opportunities of both cost savings as well as the additional enhancements that come from managing money on a digital ledger are just too attractive for larger central banks. And it presents a real opportunity to provide more debt offerings in a more sustainable way to try to prevent some of the craziness that comes with losing location on much of your outstanding monetary supply. So this is great to see. This is certainly not the first. It's just this momentum continues to grow on launching on-chain debt instruments. It continues to seem like this is the leading initiative and driver of a use case in 2023.
Yeah, it's funny how every region tends to, you look at the United States, obviously I think fund admin and equities tend to be a focus for tokenization. If you go over to Germany and Europe and Switzerland, that's more of a focus on bonds. Same with the APAC. It's just, and real estate seems to be super hot out of Dubai and the Middle East. It's all pretty interesting takeaway. It's a global movement, folks, which is why we're headed over to Japan for my next bit of news. We saw that Hitachi last week announced a 5-year, $10 billion, yen, $69 million US dollars, which is, by the way, significantly up from the $3.5 million US dollars that the bond that they did last year. But they're doing yet another digital green bond. It's in addition to issuing the unsecured tokenized bond that they did. Hitachi developed the technology to basically track green credentials, right? So this is a green bond, ESG movement, if you will. And you need a solution. That industry is sort of a mess when it comes to tracking and referencing and validating all kinds of ESG related or carbon credit related issues. So this is a big deal because it's also in conjunction with the JPX, just like I did, I believe it was last time around. And that's, by the way, the Tokyo Stock Exchange. And it's also underwritten by Nomura, another leading investment bank. So you've got the exchange component, you've got the investment bank, you've got a very prominent issuer doing a pretty interesting green bond here. Any takeaways on this, guys?
Great seeing a lot more participation here. Obviously, we know that the APAC region is huge on bonds, as we've seen in our past reports of what we're tracking. And so the same consortium that's participating in this one, I mean, this is a 10 billion yen 5-year bond. That same consortium just participated just last year with JPX's own issued digital green bond, but that one was just 500 million yen and 1 year. So I would consider that a little bit more of a pilot. This is a little, they're, as we like to say, crawl, walk, run. They're starting to get up there now. Good to see.
Yeah, the other interesting thing that I saw about this one and is it's unusual. Maybe I believe it might be the first, but guys, correct me if I'm wrong. This is an unsecured bond. meaning that it doesn't seem like there's an underwriter. There's not somebody that's actually backing the collateral behind this debt instrument. And so I think that shows growing confidence in this technology, that they're pretty sure that it's not going to go wrong, and that they can leverage the technology to administer this offering more effectively. I think that that's fascinating to see the underlying financial components beginning to mature as well. So this is, I think, a step in the right direction with respect to these institutions being more comfortable launching debt products. And guys, into our last piece of news here for the Token Debrief, we're talking about Polygon and DigiShares. They are collaborating on building a framework for tokenization together, and they are doing it specifically targeting tokenization and DeFi applications. So they're launching what they call the Decentralized ID Framework, that the acronym is DITO. And the goal here is to actually provide infrastructure for staying compliant with KYC while still allowing for blockchain applications to function. So they're using Polygon's ID technology, and then they're using DigiShares' tokenization technology in this collaboration. This is pretty cool to see, because KYC is still one of those pieces that I think hasn't yet fully been adapted into these digital environments. We know there's a few different companies working on this, but a collaboration between a huge blockchain with significant adoption as well as a leader in the tokenization space seems like a natural fit. Any thoughts from the rest of the team here?
Yeah, happy to jump in on this. This is that holy grail opportunity for DeFi, right? DeFi and security tokens, or RWAs, are almost in a way at odds, at least from the way that many of the crypto communities see it, as wanting things permissionless, but at the same time bringing things from the real world on chain, right? So the reality is, in order for it to actually work, it is going to have a middle layer identity technology that does KYC, AML checks, the whole shebang, to make sure that you can actually create a safe environment. For the true maxis, some of them, they may not be all too interested in something like this, because they want that anonymity. They want to be able to do things without restriction. But the reality is, for RWA movement to take advantage of fully DeFi functionality, right, of being able to actually have a decentralized lending protocol to leverage for your assets, or to leverage an automated market maker that is sort of in this permissioned decentralized environment, that's still an awesome innovation. It's going to be revolutionary for capital markets, but you're going to need something critical like this type of infrastructure that Polygon and DigiShares are building. So that is my feedback.
Absolutely. They're integrating some sub and Fractal ID who have some practice in this area. So there'll be some of the partners here. And also, just quick note, this is DigiShares did say that real estate.exchange, which is something that's coming in the next year or so, will be one of the users, obviously, since they're in the same ecosystem. And so this announcement just comes 2 weeks away from the closing of DigiShares Reg CF offering on Republic. So if you are interested, obviously that's not investment advice, but if you are interested, check them out on Republic, and you would be participating in their capital raise with this news just coming out now. But with all that said,
point. Well, I did also have a chance to recently interview folks from SteelWave. So if you haven't heard of them before, let's go roll the clip. All right, another awesome Security Token Show interview. I am the pleasure to have both Mitch and Aaron from SteelWave Digital on the show today. Aaron, Mitch, how are you?
Thank you for having us.
Fantastic. Thanks for having us on.
Yeah, always excited, especially because, Mitch, you and I, we had the chance to actually meet not too long ago and share the stage at the Benzinga Digital Asset Conference. We got to dig into a little bit of your vision, which I think is really, ahead of the curve in terms of real estate. You guys have been looking at this for quite a while. I know you got a background both in real estate, kind of touching it, as well as with blockchain. So tell us about the vision of SteelWave for those who have not heard of it.
Yeah, definitely. First off, I thought the event went great. Panel was awesome to be up there with you. But yeah, I mean, my story back in 2017, I founded a volatility trading hedge fund. I was at school. We were basically trading on 5 to 10 minute hold times, just off of AI driven data scrubbing. There was no long-term investment thesis per se. So when we graduated, I kind of stepped back and I was like, space needs something an institutional player can scale real assets into. And I turned to my father, who runs SteelWave. I was like, look, Barry, if we can utilize this technology to raise you money, A, be the first player really doing it, but B, it'll open up markets that you previously didn't even know existed, specifically international markets. So we set out to jump into it. Aaron has spent 15 years at SteelWave. He came into the SteelWave digital group, and we set off to tokenize a deal starting out. We shortly realized that the market wasn't quite deep enough for the scale that we needed. Our smallest deal is about 100 million. Our biggest is somewhere in the billion range. The market just couldn't add up. So we stepped back and we were like, look, the big market opportunity for international investors wanting US-based commercial real estate. If we can set up a fund for them to do that, but give them the option to tokenize their interests, they'd be all about it. And we set out to do it. Aaron, you could probably speak more on the actual market opportunity, but from a 30,000 foot viewpoint, we see the space as the future. We see it growing. We want to be on the front edge of it, but we don't think they're necessarily there yet for institutional level play. Aaron, you can probably speak on to what SteelWave is and what that means when I say an institutional level play.
Yeah, no, absolutely. So, Aaron, I've been with SteelWave nearly 20 years now, and we are a West Coast based owner operator predominantly of office and life science product in the major tech markets. And we've seen an opportunity here, as Mitch said, to be the bridge to bring both institutional investors and institutional quality real estate into the digital ecosystem. So we've got the deployment capabilities here to go and acquire US-based real estate to bring into the environment. And I think what we had found, we had dipped our toe in the market here a couple of years ago, that most of the ecosystem was a retail investor-driven market. And we could not scale our type of investments, I think, within that environment. So we've taken it upon ourselves to bring the institutional investors here into the space. And by doing so, we have currently launched a fund that is targeting long-dated leased credit-backed office and life science real estate, a complete risk-off strategy that can provide, I think, heightened returns given the volatility and disruption we've seen in the commercial real estate market today. And our goal is to bring these institutional investors into the space through a traditional vehicle. And the digital twist that we're offering here is that we're providing our LP investors the option to convert all, none, or some of their LP interest into digital securities that can be traded on a future exchange at no cost to the LPs today.
I think that was actually really eloquently put, Aaron. That is, in fact, exactly what's happening with the real estate tokenization movement, right? This isn't about creating a whole new product. You got to bring the same familiar infrastructure, the same traditional model to your institutions, but now you enable that option to digitize. Trading, it sounds like, is something that you're hearing as an interest from institutions. So again, makes a lot of sense. Mitch, the blockchain is obviously a big component to this. You're super familiar with the industry. There's a lot of debate and philosophy around how you approach tokenization. Anything you want to share with the audience about how you're tackling this?
Yeah, I mean, for us, again, we want on the front edge of it, and it's really a new market in the fact that it really only came to the scene 2016, 2017, right? And that's where you start to see real fractionalization of ownership come into what we call tokenization today. For us, we see it as institutional backed investment opportunity being brought to the retail investor, right? Well, funds already raised, give the institution an option to bring a piece of that to the retail investor. You can't go the other way around. The retail investor won't be able to fill a large deal size like what we're doing. And that's where we kind of flipped the script on what everyone was thinking. We're like, look, there's a huge demand for international money, specifically distressed international money right now, to step into U.S. real estate. So if we can get an opportunity that does that and gives them the option to tokenize, it's a win-win from both angles. And that's really where we see, all the international players see this as the future. They understand this, they understand the technology, they know what we're talking about. Whereas the U.S. does not. The U.S. has fought it. The U.S. institutions don't really see this as a future, and I think they're being left in the dust because of that. So for us, we're bridging in a lot of these institutions internationally that want this U.S. exposure. And Aaron, you speak on what we're seeing from the LP side and what they really like.
No, and I think that's exactly right. There's an absolute void at the moment in the commercial real estate space, both from a debt and equity perspective. Most institutions are on the sidelines. And I think with that, it's created a tremendous buying opportunity, specifically right now, to go and deploy this strategy. And the groups that we're speaking to overseas are seeing the same thing. And so we're excited to bring more capital onshore here into the space. And again, with this digital twist, to be on the front end of bringing institutional real estate into the digital ecosystem.
Decades of experience, huge deals, great track record. It's super exciting to hear a firm like yours coming into the space and helping, again, bridge the institution side of it. Any closing thoughts, maybe around any announcements or for anyone in touch, maybe a timeline on when they might be able to take advantage of something like this?
Yeah, we just got regulatory clearance about a week ago, the week we had our conference. And, it's kind of the perfect market opportunity here, right? We're seeing a bunch of volatility. We're seeing price things. We're seeing, things in the market that if you had a consistent cash flow, a risk-off investment, that's something an institution can scale into, right? And that kind of mitigates volatility in which we're seeing right now. And the way we're doing this, I think it honestly forced hands of the regulators, right? Like we're providing an investment opportunity that they can run due diligence package on. They, can check all boxes of what an actual security is. So at the end of the day, it's really no different than any other investment opportunity in the real estate space. It's just this one's utilizing this futuristic technology to raise the money. We're really excited about it.
That's amazing. Aaron, did you want to add anything to that?
No, we're excited to be here in the space and look forward to having more announcements here in the very near future.
Well, I'm looking forward to it as well. We hope to have you both on the show again soon with some exciting news, it sounds like, in the near future. With that, we're going to end up the interview here and we'll get on with the show. Okay, guys, what's happening in the market? If you are living under a rock, then you might not have heard that INX listed the Republic Note, which is a fascinating instrument leveraging technology, tokenization technology through and through. We had a great little interview on that, actually, if you want to check it out on YouTube with Morgan from Avalanche and Jeff from Republic. But some big news now that it's officially live on INX as of last week. I believe they issued on the 6th. So let's go over what I would think is an interesting fact. What was the first 24 hours of volume, guys? It was roughly $94,000 with an open of 40 cents, a high of 50 cents, a low of 35 cents, and closing at 37 cents in the first day. Very interesting movement. Lots of volume, I think, for a first day one. What do you guys think here? Direct from INX here.
And the close down 3 cents. That was the first thing that I noticed it obviously has a lot of volume, which is so exciting. I think we want to monitor and see how this does over the next, call it week and a half. Great to see that there is liquidity in this market and that people are able to redeem these shares. Obviously a super cool portfolio. So I think that it's not going to stay low for too long. Jason?
Yeah, absolutely. I mean, this is something that was originally issued at 36 cents in the primary market. So great that it opened at 40. Obviously, there was a lot of hype around this and everyone's very excited for this instrument. I think it's a unique one in the way that it's structured. And obviously, Republic does come with a lot of that, audience that they're bringing onto the INX platform through this, because they're essentially working together to enable these capital markets to be growing. And obviously, we all know about the upcoming acquisition news, at least that they're working through. So it speaks towards people's confidence in Republic, but also obviously the fact that they're getting a piece of every company that goes through Republic's platform. So really, really exciting. Curious to see in the next month how trading volumes are impacted on INX as a whole. Now that more investors are coming in essentially as a feeder, if you will, through the note, as additional investors come onto the INX platform.
And as we talked about with this news when it happened, I mean, there's obviously an exciting pathway here for other Republic crowd-funded companies to leverage this same process to be listed. So the hope is that this will be a really great pipeline for future issuers as well. And that's only going to drive more volume, more interest, and more investors onto the INX and in the future, the Republic trading platform. Yeah. And then, Herwig, you got anything else for me, or you want to dive into the next news here?
No, I think you guys all have great sentiment. But my only thought, honestly, is that I think it's really interesting how this gets evaluated by people who are buying the note, because there's obviously a lot of hype around getting exposure to a venture capital like construct, which is really unique and typically not accessible. But, how many people are actually going in through the entire portfolio and figuring out, hey, exactly when do I think this might return XYZ, and then as it results in distributions to the note, that gets, of course, capped at 2 million, I believe, and just continuously cycles and pushes out. So you got to really kind of, like, in my opinion, try to figure out, okay, how many times over the next several years do I think this is going to, and presumably ramp up distribution. So it'll be interesting, because each distribution that happens will probably also have some kind of a market impact on this instrument in the future. Mm-hmm. So all just a bunch of fun speculation from my end over here.
And into our next piece of news, we have Fireblocks. They are a heavily capitalized company. They've raised quite a bit of money over the years. They've built a successful business in the custody space, and they have continued their run of acquisitions, this time buying Blockfold, which is a company that builds smart contract development and does a lot of tokenization work. The goal here is to expand, I think, the core business of Fireblocks in terms of having customization with their tokenization services for many of their institutional clients that need a variety of things. In the announcement, Fireblocks also noted a 350% increase in tokenization projects that they're working on, and anticipates this market to grow to 16 trillion by 2023. Fireblocks also mentioned in the report they have already delivered over 10 stablecoin projects and are working with banks to issue stablecoins with 25, additional member banks. So they are driving this CBDC, this stablecoin initiative, alongside many of the banking partners that they're working with. They're doing a lot of the blockchain component and development on the back end, and they are continuing with this market, and they've seen a lot of success. So guys, Fireblocks, making an acquisition, we're still seeing this market be high.
It's a big acquisition. And just like we saw with another custody company last week, Copper, turn towards tokenization, if you will, in Dubai. Now we have yet another major custody company, a big one of the biggest, also really pointing their focus around tokenization and security specifically. So I think it's really great to see this further validation and again, what I said last week, which was we're going to continue to see more and more crypto companies embrace RWAs, embrace this new tokenized landscape for capital markets.
Yep. They're going to be offering a lot, in terms of their services, a complete service, anywhere from advisory, start to finish, all the way through orchestration, distribution through their network. But they are still open to collaborating with everyone that they have been already. Bitbond, securitized currency, Tokeny, and others for the open tokenization marketplace. So keep that in mind, anyone that's watching this. Good to know that Blockfold and Fireblocks do have previous experience working together with the Tel Aviv Stock Exchange. And I believe that the team there did give them, some good sentiment into what this acquisition is to unfold. But moving on to our next piece of news, we have Exodus announcing the end of its ATS trading in preparation for their OTC QB listing. So that means that their Class A shares on T0 Securities ATS and the securitized markets ATS will both stop trading by the end or by the close of trading today, Monday, December 11, 2023. So what does this mean? Obviously anyone on securitized, they are the transfer agent. So you're already good. You're the record name holder of the securities here. And T0 holders, you guys will be transferred over to the securitized transfer agent to also then be the direct record holders for the Exodus common stock here, the Class A shares. So Exodus is a company that we've referred to a lot, guys, in the past. They did a lot on with their Reg A and whatnot. They're a great example there, but I'm curious to hear your thoughts on what this announcement means for the investors, for the issuer themselves, and of course the ATSs.
This is disappointing. I think that Exodus was the first Reg A Plus offering to do a full $75 million fundraise. They then listed this platform. This was a great use case for retail driving the market, for a lot of other issuers. I know that they got a lot of positive coverage and it's driven a lot of interest in this market. So it's unfortunate to see that they were unable to figure out a way to do a dual listing on both the OTC markets as well as on these ATS platforms, like we've seen from companies like T0 that has dual listed their asset on OTC markets. INX has also figured out a solution to around some of these problems. So it is disappointing, I think, to see a token come off, especially one that's done so well. But I think it's only time will tell how this will perform, and it'll be an interesting use case. I mean, if they can drive more liquidity through OTC markets, then that's going to be something interesting to pay attention to. And if they can't, it's also, I think, a good feather in the cap for tokenization. So only time will tell, I think, on that one.
Good example of traditional markets merging in, that this is not going to be just a full 0-to-1 off-chain to on-chain. We're going to see a lot of hybrid tokenization in order to patchwork our way into a fully on-chain ecosystem. So, I think OTC markets is playing an important role in at least trying to create liquidity. It sounds what would be most interesting to see is, are there funds and market players and the way OTC markets work and leveraging that licensing that they have to be able to plug into all of these different groups and other brokers. It'll be interesting to see if that really brings in a whole lot of new interest potentially to this product. So we'll have some eyes on Exodus, no doubt. With that, I think we can get to our last bit of news around the market, specifically around SocGen, Société Générale, one of the biggest banks in the world, if you haven't heard of them. But if you watch the show consistently, you'll know that their Forge division is extremely active in this space, right? They've been doing a lot of pioneering. They've won our Company of the Week many times. And it's because they are constantly doing amazing things. And on the topic of green bonds, which we discussed earlier on the episode with Hitachi, they are also issuing a digital green bond, this time as a security token, of course, on the Ethereum blockchain. So the bond, which is worth 10 million euros, it's structured to finance eligible green activities under SocGen's framework. They expect this to be a step towards using blockchain for ESG data transparency and certification, just like we discussed with what Hitachi was working on with JPM, the Japanese Stock Exchange, as well as the Nomura. And then finally, for SocGen, they believe that this includes a very novel innovation like 24/7 carbon footprint information, accessible in the smart contract. So interesting data to be adding on the smart contract level. And then the bond issue is part of SocGen's efforts to integrate everything on their debt capital markets into digital instruments. So a huge movement. Big deal, guys. Another green bond on the market. SocGen, once again, active. Again, another leader in the bond tokenization space.
Yeah, I think this is exciting. And honestly, to second on that, SocGen also launched another project. So not only was this green bond an amazing innovation, again, launching another tokenized debt instrument, but they also are taking the stablecoin, which is presumably being used to settle this whole entire bond structure and pay out dividends and handle the entire back office plumbing of this issuance. They're actually listing that on to an exchange. So their EURCV, their Euro stablecoin, which is exactly what they're using to settle this bond, is actually going to be listed on Bitstamp, which is a crypto exchange. So the stablecoin has full KYC AML capacities, and they're actually launching it on for anybody to be able to purchase and use. And as far as I know, guys, this is the first institutionally issued stablecoin that is retail available on a crypto platform. So this, I think, really completes the life cycle from start to finish in terms of onboarding users into this ecosystem, the retail users who then can get exposure to the stablecoin in a safe way. And then that same stablecoin is being used to settle the institutional vehicles at the top level. So I think this is really cool to see SocGen just really understanding from soup to nuts how to leverage all the technology, and very exciting to see.
Absolutely. Absolutely. I mean, both great pieces of news. I think you guys pretty much covered the map on them. But, you know, as we all know, in the green ESG area, I mean, it's been fragmented in the past. So great to see new innovations here, as you guys talked about, full life cycle coming on chain. But with that, we will be transitioning over to another interview with Ed Nwokedi from RedSwan to expand on the news we covered earlier on their $4 billion portfolio tokenization project coming from the GCC area. So join us over in the STS interviews. All right. Well, we're back with another Security Token Show interview. We just talked on the Token Debrief about the exciting news coming from RedSwan. They're tokenizing $4 billion worth of real estate onto the blockchain. And we're joined today with Ed Nwokedi from the team to give us his perspective directly on this exciting news. Ed, how are you this morning?
Jason, doing great. Thanks for having me. I love this new setting you guys have. This is wonderful.
Oh, we appreciate it. You know, we love to accommodate for everyone to be able to come on and give their direct perspective, and we're lucky to have you today. So diving right into this piece of news here, you know, tell us what's so exciting about this specific real estate portfolio that you guys are now involved in.
Well, it's exciting because it's the largest single portfolio transaction going on chain. It happens to be outside the United States in the GCC, which is really the Middle East, many countries in the Middle East. That's a very rapidly growing community. And so therefore putting this on channel, letting the whole world be able to participate in this $4 billion assignment gives us a lot of excitement because, you know, it's they're really leading, I think, the market in the world in terms of digital assets. Their laws have been passed in order to create digital stable coins for their community citizens, but also they're really actively embracing tokenization as an asset class for real estate. So we're excited about that whole market, and this is just the first of many to come.
Absolutely. Absolutely. It's a growing region, and I do want to talk about that a little bit later on, but let's dive a little bit deeper into the portfolio itself. You know, what does this portfolio consist of, and how did you guys make it up?
This is like 36 assets, and basically it's broken up into stabilized assets. They're part of the assets are going to be multifamily, office, retail, and we also have what we call infrastructure industrial. That is, you know, certain large farms that are producing livestock, you know, feed for the livestock, also fish for the whole region of the GCC. So yeah, there's pretty much a pretty big mix here, which is great for investors because you're really buying into the growth, diversified growth of that entire region.
Absolutely. And this, you know, it's, first of all, for anyone that's not directly involved in real estate, it's very hard to pick any given individual asset to see, hey, what's going to do well especially if you don't know the market. So this is interesting, right? You're able to participate into a diversified portfolio in a region that most investors maybe are not privy to. So you guys are doing the hard work here, and it's really exciting. Tell us about, we mentioned here there's 20% prime development sites. Tell us a little bit more about the growth in the region and why this 20% is so important to the portfolio.
Yeah, well, the 20% is important because, like I said, 80% is stabilized, so it's generating good profits and good yield right now. But the 20% are really strategic land sites that they own outright, no debt. And they're going to build high-rise developments, mixed-use developments on those land sites. So our investors get to come in on the ground floor of those developments, and that gives you a much higher return at the end of the day when they become stabilized. So it's a great way to have instant income day to day from the stabilized assets, but also having a higher income from the assets that they develop on those land sites.
So you're essentially getting in a little bit early on these land sites. I think CBRE reported $1.4 trillion worth of a pipeline to be developed. Is that right?
Yeah, the Middle East is one of the fastest growing markets for development. 1.4 trillion is the pipeline for new developments for the next 3 years. That's a lot of capital, and that's a lot of development. But you got to look at Saudi Arabia is having the World Cup, also a expo taking place. So they need hospitality projects. They need lots of projects for infrastructure. And so money, they have capital, but they're now looking for bringing outside capital into the market, which is one of the things that they've never done before. But I think looking at what's happened in Dubai, how foreign direct investments were so successful there, that entire region has kind of taken a play from that book.
Very cool. Very cool. And what has your experience been working with White Rocks Holding? They're the sponsor essentially behind this project, and they give you guys the rights to be able to tokenize it. What's that been like, and how does this project potentially, give us any insight into future developments as well in terms of tokenizing more assets?
They're a great company. We work with them now. The relationship has been close to a year. It took a long time. They actually finalized the transaction, but got a chance to get to know them, get to know their vision. They're very active in developing an entire region. And so they're working with many countries in the region to develop infrastructure projects and all this. They're looking to raise capital from outside sources rather than use the same internal sources they used before. So a great time for Americans and as well as other foreign citizens to get involved in the development of the Middle East and Africa, and working with a company that has a great reputation.
Very cool. So hopefully we can expect them to tokenize even more after this portfolio, but this is already a significant amount. I mean, in terms of RedSwan's standing here, you guys have already tokenized $5 billion, as we've mentioned before. Now you're adding another 4 just like that. Two things. I think one, it speaks towards the fact that, with tokenization, you're not creating new value as you would in crypto. You're essentially taking an asset that already has value and you're just putting it on chain. But the fact that you are putting it on chain speaks towards RedSwan's standing here in terms of where you guys are in the real estate tokenization market, and you guys are expanding. It sounds like, or not even sounds like, it looks like you are expanding elsewhere to other regions. What can we expect RedSwan to be doing next year?
Well, we are expanding because this recent trip we had overseas to Korea, to Singapore, and the Middle East. Was eye-opening with the amount of demand we're seeing in those markets. Many of the property owners and also governments would like to have tokenization as a way to capitalize some of their major infrastructure projects as well as development. So we were well welcomed in that market. I mean, we were put into Economist magazine, for example, but we're going to be there. We're going to actually expand our footprint in the Middle East because our client is very active in developing there. But we also see opportunities in Southeast Asia and Africa as well. So yeah, keep a lookout. We want to continue to grow our pipeline because we think that it all starts with the real estate first as an asset class, and then bring on all the investors. But we want to make sure there's enough content to satisfy every level of investor.
Absolutely. Lots of exciting things in the pipeline for you guys, I'm sure. And we do dive a little deeper into this, by the way. We did do a full interview with Ed, which you can find on our YouTube channel. It's over 40 minutes long, and there's a surprise teaser trailer in there for the portfolio. So definitely go check it out on the STM YouTube. Ed, with all this growth that's happening with RedSwan, and now you guys are expanding, bringing on a lot more assets on chain, how can people potentially participate on that upside, RedSwan's upside?
Well, we are raising capital right now. We have our Reg CF for this outstanding, putting together a $5 million raise. I believe that, we need capital to keep growing. You see, we're using the capital very wisely. We want to be the next BlackRock of digitalized real estate around the world. And we're going to do that by growing our base of personnel and reach into more of these markets. You have to have people on ground in markets to really expand. And that means we need to employ more people for RedSwan to keep this growth. I'm very happy for what we've done so far on the budget we have, but I think by bringing on more capital, this next raise will take us, hopefully the $25-30 billion of assets under management. I'm getting ahead of myself, but our five-year outlook is in the trillions. So I think that it's very possible.
Absolutely. Well, have people check it out at redswan.io/invest if you're interested in checking out the opportunity. As you guys are seeing here, RedSwan is actively putting assets on chain, new clients, and a lot more expansion room for early next year. So Ed, thank you so much for joining us. Once again, everyone, if you want to check the full length interview, go to STM's YouTube channel to check that out. And with that, thank you, Ed. We're going to head on over back to the studio.
What another great show, Kyle. What another great show. We couldn't end it with our companies of the week, though. Isn't that right?
That's totally right. This was a tough week, I think, because we did have some great winners. And I think there's one certainly that stands above the top. Did you want to lead us off with your choice, Herwig?
I mean, I think that's because we're talking about SocGen's Forge division, doing two big things, listing on Bitstamp their stable coin, as well as issuing that green-based technology, folks. This is when we're talking about, of course, revolutionizing all capital markets. Each asset has its own unique features and issues. And of course, they all can leverage tokenization in a unique way to benefit that. In this case, 24/7 carbon footprint tracking, as well as potentially other related, features around, carbon credit tracking and other things. This is all very, very important, given that we're talking about the planet at the end of the day. And this all has an impact on asset value, how people evaluate bonds, as well as make their investments. So naturally, putting this data on chain, which means, wink, wink, for the future, there will actually be smart contracts that will be able to read that, as well as then you can basically react to changes in the carbon footprint, basically automatically rebalance your portfolio. What a cool concept. I see where they're headed. So got to give SocGen's Forge division my company of the week, Kyle. I believe we've given it to them already several times, but we, for this week, it just took the cake.
Yeah, no, I think this is a great choice, and it's really, really impressive how it does feel like almost every week they have a new announcement, a new product that they're launching, a new development. It's really, really great to see how much they've adopted this. And I mean, it makes total sense, right? Once you wrap your head around the technology, once you have some of the infrastructure in place and can see the cost of capital benefits to issuing and leveraging this technology, why would you go back to the traditional system? It really makes total sense, but it's exciting to see they've totally gotten that message.
What about you, Kyle? What's your company of the week?
My company of the week this week, I think I want to make it Fireblocks. And Fireblocks is a custody platform. They've built a ton of technology for the industry. They've been in the space for quite some time now, and they've, I think, very successfully pivoted into launching all kinds of CBDC projects, all kinds of stablecoin projects with institutions, as well as been pretty instrumental in building the technology required to actually facilitate a lot of these debt instruments that we're talking about for these banks and institutions. On top of that, the news this week of them acquiring a new smart contract development firm and mentioning that they are up 350% in smart contract development projects means that there are more and more institutions coming in. And without somebody like Fireblocks to help make it happen, it would be very tough for a lot of these banks that are certainly less familiar with the technology to understand the applications. So without Fireblocks' effort in the space, I think it would be tough to onboard all these institutions. So really love what they're doing as well.
Critical infrastructure makes a lot of sense. You had to put a spotlight on them, I think. So I'm glad you chose them. With that, that's our show, Kyle. Again, another week of just everything, man. Bonds, real estate, markets. Thanks to the folks from SteelWave and RedSwan for their insights, as well as everything else that's happening in the industry. You can catch it at stm.co. Please, anything you want to be hearing about, let us know. Kyle and I were available on social media. Reach out to us. Like, subscribe, share, let the word out about tokenization. With that, we'll catch you, as always, every week on Mondays with the Security Token Show. Happy tokenizing.